Well, the IMF chief has said that the world economy is expected to grow at less than 3% this year, down from 3.4% last year, increasing the risk of hunger and poverty globally, with India and China expected to account for half of that global growth of 2023. In fact, let's listen in to what she said.
Global growth in 2022 dropped by almost half, from 6.1 to 3.4%. And this slowdown continues this year. Despite surprisingly resilient labor markets and strong consumer demand, despite the uplift in China, we expect the world economy to grow less than 3% this year. And you would see in our World Economic Outlook that is coming next week that growth remains historically weak now and in the medium term. There are significant differences in these growth projections among country groups. We do see some momentum coming from emerging market economies, especially from Asia. This year, India and China are going to deliver half of global growth. But we have quite a number of economies that are facing a very stiff climb. Economic activity is slowing down in 90% of advanced economies in the US, in the euro area, where high interest rates weight on demand. And we are going to see in low-income countries higher borrowing costs coming at the time of weakening demand for their exports. What does that mean? It means that per capita growth is going to stay below that of emerging economies. That is a severe blow. What it translates into is even harder for these countries to catch up with those that are better off. Poverty and hunger could further increase. This is a dangerous trend that started in the year of COVID.
And in fact, our senior executive editor Abhishek Kapoor also joins us on the phone line right now. Abhishek, the IMF very, very clear in its messaging, saying that India and China remain the two bright spots. But overall, after the Ukraine war, the world economy is looking to take longer, perhaps, to recuperate.
Well, yes, Nupur. So, India and China are doing the heavy lifting, is sort of stating the obvious. There are almost 80 economies globally which are facing highest debt component in their GDP post-recovery in pandemic. There are about 36 economies, including the most in West, which are seeing absolutely inflated, inflation numbers, like absolutely heated inflation numbers. And that actually led to this cycle of increasing rates. Now, the issue is, if you have fever, you take paracetamol, but then you have to also decide when to stop. So this anything-it-takes approach of the U.S. Federal Reserve has put United States and then, of course, the world economy in a situation where you are looking at an impending recession in the U.S. In the next 2 quarters. And the U.S. Federal Reserve is still not stopping the rate hike cycle, which in fact has led to some internal disturbances in the U.S. economy, as we saw in the bank's crisis. That's really panning out. India remained ahead of the curve in the increasing rate cycle, and of course now in the stopping rate cycle, we saw how the RBI yesterday only stopped increasing rates. So I think in that sense, it seems when it comes to basics of economics, we are doing better, and that's why perhaps it's getting reflected in better numbers as well. And the IMF acknowledging that India and China essentially would be doing the heavy lifting insofar as global economy is concerned. I was just going through some numbers, and there's something called Powell's curve, which is about which measures which is the index of the bond market, and it's plunged new lows, clearly suggesting that in the United States and Europe, we are looking at the possibility of a recession or a full-blown recession over the next 2 quarters itself. And then we had these OPEC cuts, and which is going to give another spike and possibly lead to a fuel crisis. So I think strong headwinds there for the global economy, with India obviously being an oasis, essentially because the economy was shepherded well between the RBI, which took care of the interest rate cycle, and then, of course, the Raisina, the North Block, the Finance Ministry, which by shepherding off the manufacturing sector through PLI schemes, or with a major push coming in on the capital expenditure front, I think took care of the economy. And that's why I think the world also acknowledging that it's India and China that would be doing the heavy lifting.
All right, Abhishek Kapoor, thank you for joining us. So that's the latest statement that has come in from the IMF, which essentially says that India and China remain the two bright spots. However, the world economy will take longer to come out of COVID, given the fact that the war in Ukraine is raging on and is affecting energy needs globally.